The following accounting information and financial ratios of PQR Limited relates to the year ended 31st March 2023. Accounting information is given. Gross profit is 15% of sales and net profit is 8% of sales. Raw material consumed is given. It is 20% of works cost. Raw material consumed is nothing but opening stock of raw material plus purchases minus closing stock of raw material. So this is nothing but the raw material consumed. It is 20% of the works cost. Direct wages is 10% of works cost. Stock of raw material is 3 months usage. What does it mean? It means that out of the total raw material consumed during a period of 12 months, 3 months usage is kept as stock. To put it very simple, for example, let's say if raw material consumed is 12 lakhs. So this 12 lakh is consumed over a period of 12 months. Out of this, what is the 3 months usage? This is for 12 months. So 3 months usage will be into 3 by 12. We get 3 lakh rupees, right? So this 3 lakh rupees is nothing but the stock of the raw material. Stock of finished goods is given. It is 6% of works cost. Debt collection period is given 60 days. This is nothing but receivable days. All sales are on credit. There is no cash sales for PQR Limited. Financial ratios is given. Fixed asset to sales, it is 1:3. Fixed asset to current asset, it is 13:11. Current ratio is 2:1. Long-term loan to current liability 2:1. Share capital to reserves and surpluses 1:4. If value of fixed assets as on 31st March 2022 amounted to 26 lakh, prepare a summarized profit and loss account of the company for the year ended 31st March 2023, and also we have to prepare a balance sheet on 31st March 2023. Now what is important is, listen, in this question fixed asset is given. So obviously fixed asset should be the starting point in this question. Here fixed asset is directly given as 26 lakh in this question, and also the fixed asset to sales ratio is given. It is 1:3, or fixed asset to current assets is given. It is 13:11. So here we have information for calculating either sales or current asset. We can start the question either by calculating sales as the first working note or current asset as the first working note. But before proceeding further, this question is based on an assumption. Even though it is a steady material question, that assumption is not explicitly mentioned in the question, and it is not mentioned in the solution also. First, let's understand what is the assumption of this question. This question is based on an assumption that opening stock of raw material is equal to closing stock of raw material. Similarly, opening stock of work in progress is equal to closing stock of work in progress, and opening stock of finished goods is equal to closing stock of finished goods. Now what is the purpose of making this assumption in this question? First, listen, here it is given PQR, the name of the company is PQR Limited. It is not mentioned whether it is a newly formed company or an existing company. Generally, if it is a newly formed company, their opening stocks will be 0. Opening stock of raw material will be 0, work in progress will be 0, finished goods will be 0. But they might have some amount of closing stock of raw material, closing stock of work in progress, and closing stock of finished goods. But here we are assuming that it is an existing company. Why? Because it is not mentioned in the question. It is a newly formed company or nothing like that is mentioned. So we can assume it is an existing company. For existing companies, we are making the assumption that whatever the opening stock of raw material, the same amount is maintained as closing stock of raw material as well. Similarly, whatever the amount of opening work in progress is maintained as closing stock of work in progress as well. Now what is the important of this assumption is, let's look at the cost sheet. How does a cost sheet look like? Opening stock of raw material plus purchases minus closing stock of raw material. If we do this, we will get raw material consumed. To raw material consumed, we will add plus direct labor plus manufacturing overheads. What we will get? We will get works costs. Right? And here opening stock of raw material and closing stock of raw material are same. So raw material consumed is equal to raw material purchases as well, and works costs plus opening stock of work in progress minus closing stock of work in progress. What we will get? We will get cost of production. Why? Because see, why we are adding opening stock of work in progress? Because this opening stock of work in progress is nothing but the closing stock of work in progress of the previous year, right? So whatever we had, whatever the work in progress inventory we had at the beginning of the year would have been converted into finished goods at the end of the year. So we are adding it to the works cost. Why we are subtracting closing stock of work in progress? Because it is not yet converted as a finished goods. It is still a work in progress. So there is no point in converting. There is no point in adding this closing stock of work in progress to the cost of production, because still it is a work in progress. It is not converted to finished goods. So cost of production plus opening stock of finished goods minus closing stock of finished goods. What we will get? We will get cost of goods sold. Again, why we are adding opening stock of finished goods? Because whatever we had as a opening stock of finished goods at the beginning of the year would have been sold at the end of the year. So it is added to cost of goods sold. Why we are subtracting closing stock of finished goods? Because it is still with us. We haven't sold it. So we are subtracting it from. We are subtracting while calculating cost of goods sold. Now, what is the purpose of doing it? Listen. From works cost, we are adding opening stock of work in progress minus closing stock of work in progress. It gave us cost of production. So technically, cost of production is equal to works cost. Why? Because the assumption is that opening stock of work in progress is equal to closing stock of work in progress. So works cost is equal to cost of production. Similarly, here we can say that cost of goods sold is also equal to cost of production. Why? Because again, to cost of production, we are adding opening stock of finished goods and we are subtracting closing stock of finished goods. Opening stock of finished goods and closing stock of finished goods are same. So it will cancel out each other. So cost of goods sold is equal to cost of production. So what is important is works cost is equal to cost of production is equal to cost of goods sold. So we can say that works cost is equal to COGS. If X is equal to Y and Y is equal to Z, then X is equal to Z. Right? So works cost is equal to COGS. Now what is the purpose of doing this before solving the question? Because in the study material, what they have done is they have directly taken sales minus works cost is equal to gross profit. How can they take like this? Because here it is here we are assuming that opening stock of raw material is equal to closing stock of raw material, opening stock of finished goods is equal to closing stock of finished goods, and opening stock of work in progress is equal to closing stock of work in progress. So when we are making this assumption, then automatically works cost will be equal to cost of goods sold. So that is the reason why in this question they have taken gross profit is equal to sales minus works cost. Now let's start solving the question. So as I already told in this question, the fixed asset amount is directly given. So we can either take sales as the first working note or current asset calculation as the first working note. But I will start with sales. Working note number 1, calculation of sales value. Working note 1, sales So in this question it is mentioned that fixed asset to sales is 1:3. So fixed asset divided by sales is equal to 1/3. What is the fixed asset amount? It is 26 lakh divided by sales is equal to 1 divided by 3. So what will be the amount of sales? Sales is equal to 26 lakh into 3. So we get sales is equal to 26 into 3, it is nothing but 78 lakhs. So the amount of sales is 78 lakhs. Next we have fixed asset to current asset. It is given in the question. So we can calculate current asset as the second working note. Working note number 2, calculation of current assets. In this question it is mentioned that fixed asset to current asset, the ratio is 13:11. So fixed asset by current asset is equal to 13/11. Fixed asset is 26 lakh by current asset is something that we need to calculate, divided is equal to 13/11. So current asset is equal to 26 lakh into 11 divided by 13. So when we solve it, we will get current asset is equal to 26 lakhs. 22 lakhs, because 13 and 26 it gets cancelled out 2 times. So 11 into 2 we get 22 lakhs as the value of current asset. Now in this question, current ratio is given over here. What is current ratio? It is current asset by current liability. We have the value of current asset, so we can calculate current liability value. So working note number 3, current liability we know that current ratio is equal to current asset by current liability. Current ratio is 2 times or 2:1. Current asset is 22 lakhs divided by current liability. So current liability is equal to 22 lakhs by 2, we get 11 lakh as the value of the current liability. Next, in the question it is mentioned that long-term loans to current liability, it is 2:1. So we have the value of current liability, so we can calculate the amount of long-term loans. So working note number 4, long-term loans. It is given as long-term loans to current liability. It is 1:2, right? Sorry, 2:1. So long-term loan by current liability is equal to 2:1. So long-term loan is something that we need to calculate, divided by current liability is 11 lakh is equal to 2/1. So the amount of long-term loan will be 11 lakh into 2, we get 22 lakhs. Next in the question, they have given share capital to reserves and surplus. First, for this bifurcation, we need the value of equity, so we will keep it for later. Next, what is given is, go back to the accounting information. Here, gross profit is given as 15% of sales. So let's calculate the amount of gross profit. Working note number 5. Gross profit. Gross profit is given as 15% of sales. We calculated sales amount as 78 lakh in the first working note. So gross profit is equal to 78 lakh into 15%. So 15% of 78 lakh, we get 11 lakh 70,000. So 11 lakh 70,000 is the amount of gross profit. Now, at the beginning of the question itself, we discussed in this question, here works cost is equal to COGS. Why? Because opening stock of all the opening stock of all the inventories is equal to closing stock of all the inventories. So in such cases, works cost will be equal to COGS. So what we can do is, we can write it as working note number 5 as gross profit and works costs So here, since works cost is equal to COGS, what we can do is we can write this as sales minus works cost is equal to gross profit, because generally sales minus COGS is equal to gross profit, but here works cost is equal to COGS. So sales minus works cost is equal to gross profit. 78 lakh is the sales minus works cost is something that we need to calculate, is equal to gross profit of 11,70,000. So what will be the amount of works cost? So works cost will be 78 lakh minus 11,70,000, we get 66,30,000. So 66,30,000 is the amount of the works cost. Next, see, there are a lot of calculations that we have to make using the works cost. It is mentioned in the question that raw material consumed is 20% of works cost, wages is 10% of works cost. So we will calculate raw material consumption and wages as the next working note. Working note number 6, raw material consumed raw material consumed. Raw material consumed is given as 20% of works cost. So raw material consumption is equal to 20% of works cost. Works cost is how much? 66,30,000. So it is 20% of 66,30,000. So we get raw material consumption as 66,30,000 by 5. So we get 13,26,000. So this is the amount of raw material that is consumed over a period of 12 months. Next, working note number 7. We have to calculate the amount of wages. Wages in this question, it is given that wages is 10% of works costs. So the amount of wages is equal to 10 by 100 into 66,30,000. So we get 6,63,000. So that is the amount of wages. Next in the question, it is mentioned that stock of raw material is 3 months usage. So I already explained what does it mean. Actually I should have explained it over here. Yeah. So the point is, raw materials worth of 13,26,000 was consumed over a period of 12 months. Out of the 12 months consumption, 3 months requirement of raw material is kept as inventory. So what will be the amount of raw material stock? So that is what we need to calculate. So working note number 8, stock of raw material so raw material stock is equal to 3 months of raw material consumption. So it is 3 by 12 into, over a period of 12 months, raw material consumption is 13,26,000. So basically 13,26,000 divided by 4, we get 3,31,500 rupees as the raw material stock. Next in the question, it is mentioned that finished goods, stock of finished goods is 6% of works cost. So let's calculate stock of finished goods as working note number 9. Working note number 9. Stock of finished goods inventory. It is 6% of works cost. So finished goods inventory is equal to 6% of works cost. Works cost in this question is 66,30,000. So 66,30,000 into 6%, we get 3,97,800 rupees. So this is the amount of finished goods stock. Next we have we have information relating to debtors collection period. It is 60 days. That is basically receivable days is 60 days. And it is specifically mentioned in the question that all sales are on credit. There is no cash sales. What is the formula for receivable days? How did we arrive at this 60 days? It is nothing but your total receivables by credit sales into 365. So when you just apply the numbers in the formula, we will get the receivable days as 60. So here we can calculate receivables because we know credit sales, and 365 is nothing but the number of days in a year, and the LH is nothing but 60 days. So the 60 days is nothing but receivables by credit sales into 365. So by just applying the numbers in the formula, we can calculate the value of receivables. So working note number 10, receivables, receivable days is equal to receivables divided by credit sales into 365. Receivable days is how much? It is given in the question, 60 days. It is equal to, receivables is something that we need to calculate, and credit sales is nothing but the total sales is credit sales by 78 lakh into 365. So when we solve it for receivables, we will get receivables is equal to 60 into 78 lakh divided by 365. We get 12,82,191. So this is the amount of receivables. Now in this question, we calculated the amount of receivables, then we calculated finished goods inventory, then we calculated raw material inventory as well. So we have the total amount of current assets, that is the total amount of current assets is calculated in the working note number 2. So current asset includes what? Inventory, receivables and cash. So here we have the amount of inventories, we have finished goods inventory and we have raw materials inventory. We calculated them in working note number 8 and 9. We calculated receivables in working note number 10. So when we just remove the amount of inventory and receivables from the total current asset, we get the cash balance, right? So working note number 11, we will calculate the amount of cash balance. Cash balance. So total current asset is equal to, total current asset is 22 lakhs. From total current asset, let's subtract the receivables, which is 12,82,191, and this number is coming from working note number 10. Then we will subtract raw material stock. Raw material stock is coming from working note number working note number 8, 3,31,500. 3,31,500. Then we will subtract the finished goods stock. No information is given for calculating work in progress, so we are just ignoring it. Finished goods stock, the amount is 3,97,800. So what will be the balancing figures? 22 lakh minus 12,82,191 minus 331,500 minus 397,800. We get 1,88,509 as the cash. Cash figure is 1,88,509 rupees. So now we have solved almost everything that is required for calculating this question except equity. And after calculating equity, we have to bifurcate that equity into share capital and reserves and surplus. Why? Because see, equity includes share capital as well as the retained earnings or the reserves part, right? So what we have to do is, first we have to calculate the total amount of equity. Then we have to apply this ratio on the total amount of equity for calculating share capital and reserves and surplus. So how can we calculate equity? Equity is nothing but the total asset minus debt of the company, right? Because how the total assets are financed, either using equity or debt. So from the total asset, if we just remove the debt portion, the remaining portion of the total asset is financed by equity, right? So how can we calculate equity? Is total asset is what? Fixed asset plus current asset. Fixed asset is given in the question 26 lakh. Total current asset we calculated 22 lakh minus debt includes two things. One is current liability and the other one is non-current liability. Current liability also we calculated in working note number 3 and non-current liability also we calculated in working note number 4. See, non-current liability is nothing but long-term loans, right? So if we just calculate the difference between total asset and total debt, the resulting figure is the equity amount. So let's calculate equity as the last working note number 12. Equity is equal to total asset minus total debt. Total asset is what? It is fixed asset plus current asset minus total debt is nothing but current liability plus non-current liability. So fixed asset is 26 lakh plus current asset is 22 lakh minus current liability is current liability is how much? Working note number 3. Current liability is 11 lakh, non-current liability is 22 lakh. So when we put these two numbers together, we get the total debt. Total debt is current liability is 11 lakh and non-current liability is 22 lakh. This is 11 lakh plus 22 lakh. So here it is 48 lakh minus 33 lakh. We get equity as 15 lakh. So the total amount of equity is equal to 15 lakh. Now in this question it is mentioned that 1/5 of the equity is share capital and 4/5 of the equity is reserves and surplus. So we will calculate the share capital and reserves and surplus separately. So share capital is equal to, it is 1/5 of total equity, that is 15 lakh. So we get 3 lakh rupees as the share capital. Similarly, reserves and surplus is equal to 4/5 of the equity is reserves and surplus. So 4/5 into 15 lakh we get 12 lakh as the reserves and surplus. So now we have all the relevant information for preparing the P&L account and balance sheet of the company. So we will start with P&L preparation and balance sheet. So P&L account for the year ended 31st March 2013. Particulars and amount. Then again particulars and amount. So we will start with by sales. What is the amount of sales? It is 78 lakh. Let me write the number itself. So here it is 78 lakh is the amount of sales. Now here generally what we will do, we will write two opening stock, then to raw material purchases. So everything we will write. But here what we are assuming is, we are assuming that opening stock of finished goods and closing stock of finished goods, opening stock of raw material and closing stock of raw material, everything is same, right? So instead of writing opening stock on the debit side and closing stock on the credit side, what we can do is we can directly write to raw material consumed. Why? Because it is already adjusted for opening stock and closing stock. How did we calculate raw material consumed? It is opening stock plus purchases minus closing stock. Opening stock and purchases are usually shown on the debit side. Closing stock, it is usually shown on the credit side. So it is already adjusted and the amount is 13,26,000. So this is the amount of raw material consumed that we calculated. Then we calculated wages. To wages it is 6,63,000. So let me write the working note reference. So this is working note number 1, and raw material consumption, raw material consumed is coming from working note number 6, and wages it is coming from working note number 7. Working note 6 and this is working note 7. Next we know the gross profit. Gross profit is equal to 11,70,000. So this is coming from working note number 5. So in working note number 5 we calculated gross profit as 11,70,000. So here the total is 78 lakh, and here also the total should be 78 lakh. So what is the balancing figure? The balancing figure can be written as 2 manufacturing overheads. 2 manufacturing overheads. The balancing figure will be 78 lakh minus 1326 minus 663 minus 1170, we get 46 lakh 41,000. So this is the balancing figure over here. Now carrying the gross profit by gross profit, it is 11,70,000. In this question, it is given that, we did not do it as a separate part of the working note, but it is explicitly given in the question that net profit is 8% of sales. Net profit is 8% of sales. So we can write it to net profit it is 8% of sales. So 8% of 78 lakh, we get 6,24,000. So the balancing figure is, it can be written as 2 admin expenses, or we can write it as 2 selling, distribution and admin expenses. It is, the balancing figure is 1170 minus 624, we get 5,46,000. 5,46,000 is the balancing figure over here. So the P&L is done. Let's prepare the balance sheet of the company. So we have already calculated all the relevant figures. We just need to apply the numbers, or we just need to fit in the numbers in the balance sheet. The balance sheet as on 31st March 2023. Balance sheet as on 31st March 2023. We have the asset side, amount, then liability side. So on the asset side, we have the fixed asset. What is the amount of the fixed asset? It is 26 lakh. It is something that is given in the question. Then we calculated the current assets. We calculated the current asset total as 22 lakhs. But we have to show what is there inside the current assets separately. So first we calculated raw material stock. It is 3,31,500. Then we calculated finished goods stock. So this is coming from working note number 6. Let me check it. Raw material stock is working note number 8, and finished goods inventory is working note 9. Okay. So raw material stock, it is coming from working note number 8, and finished goods stock comes from working note number 9. It is 3,97,800. Then we calculated receivables in working note number 10. The amount of receivables is 12,82,192 rupees. Then we calculated cash in working note number 11, if I am not wrong. Yes. So cash is 1 lakh, working note number 11, 1,88,509. Actually here we are getting 509, 1,88,509, but it is better to write it as 508. Why? Because see, if we are writing 509 here, then this should be 191. Because the total of the current asset, it should add up to 22 lakhs. That is the only thing. So if you are taking 2 here and 9 here, then we will get 22 lakh 1 rupee. So in order to avoid that difference, we are taking 509 here and this is 191. Then on the liability side, we have share capital, which is calculated in working note number 12. Yeah, working note number 12. We calculated both share capital and reserves and surplus. And we have reserves and surplus, which is also coming from working note number 12. It is 12 lakh. Next we have long term liability. It comes from working note number 4, 22 lakhs. Then current liability, it comes from working note number 3, right? Yeah, current liability is from working note number 3. It is 11 lakh. So the total of the balance sheet on the liability side, it is 15 plus 22, we get 37. 15 plus 22, 37 plus 11, we get 48 lakhs. So 48 lakhs is the total of the liability side. And when you add the asset side, obviously we will get 48. Why? Because this is 26 and this is nothing but the total current asset is 22, which is shown separately. So here also we will get 48 lakh as the total asset.